Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had an amazing start to your weeks, despite the current cryptocurrency market price action, and that's what we're going to be diving into in this video. This is going to be our daily cryptocurrency market update, and we're going to be diving into a lot in this video, guys, so strap yourselves in. We're going to be going over again and reiterating exactly what is happening with the cryptocurrency market, as the cryptocurrency market right now is very much a hostage to the global macroeconomic environment. And really, markets right now, certainly your big stock indexes and the cryptocurrency market, which you can see here on this chart, the only one that is not a stock index is, of course, the green line, which is the dollar index, which, of course, there is a correlation with Bitcoin and your equity market there. But your equity market, of course, is selling off and Bitcoin is going with it. This is because of the risk-off environment. And there was some warning signs on Friday that Monday may be a bit of a difficult time period for the cryptocurrency market, given just how everything closed. So we are going to be looking at, of course, Bitcoin. We're going to be looking at the correlation again. We're going to be diving into some of your traditional stocks like the FTSE 100 for the UK. We'll take a quick look at the euro dollar because, of course, the dollar is pegged, or the DXY, sorry, the dollar currency index is pegged to a basket of other currencies that aren't doing too well. And then we're going to be diving into some of your stocks because if there is a correlation, and we know there is a clear correlation between the crypto market and your stock market, well, what comes next for the stock market? And we're going to be pulling up some tweets from the market sniper, showing us some of his potential situations for how the stock market plays out. And if it does play out in this fashion, what does that mean for the cryptocurrency market given its correlation? I would suggest it means that Bitcoin and crypto is going to follow. We did break a significant level. The last update we gave you, we said, look, you've broken that 40k range. We need to get back above it and hold it. And I'll show you that on the charts where we're sort of at. And it does look like we are now heading lower. But exactly where, we will try and pinpoint it on here. Nobody knows where the exact bottom is. And of course, given all the factors at play, it's quite a hard call to make. But is it over for the cryptocurrency market? I would argue absolutely not. This is an article here from Skybridge, goes all in on crypto, betting on tremendous growth ahead. And that's something you guys have got to remember. Markets move in cycles. They don't just go up in straight lines. They go up, they go down, they have boom and busts within them. And that's what we're currently going through. And we know the reasons, and it's why we bring them up consistently on this channel for the cryptocurrency market selling off. We know the reasons that it is selling off. And that gives me, and really the kind of pattern that you've been in for Bitcoin for the past year or so, actually isn't a very negative one, given that you've actually seen a lot of equities significantly outperform Bitcoin to the downside. Given everything that's taken place, I would argue the cryptocurrency market actually looks a lot stronger than people are giving it credit for. And there's volatility in all markets, certainly on markets such as small as ours. We'll also be diving into a little bit of the news. So like I said, we've got a lot to get through. Let's take a look at the overall market, guys. We are currently down. Of course, Bitcoin is still leading this. And what's leading Bitcoin is your macro markets. We know, and we've been looking at a few things, and we'll drop straight down the time frames. You know, Bitcoin is in a clear downtrend currently. And you can see that we actually had invalidated this long-standing ascending trend line that we had, that essentially we were looking at, and we are now below it. Now, we could see a push above it, come back to hold it, and then get continuation. But I think given everything that's going on right now, certainly when the S&P and the Nasdaq open, it's going to be very telling, because if these continue to sell off, we've already seen the FTSE sell off this morning. A number of German stocks are down. Also, your Chinese markets are down. You know, is there going to be further downside continuation? I think it's very, very probable at this point. But there will come brighter days, guys. It's just one of those things in the cryptocurrency market. People often forget just how volatile this market is. And not only are, you know, everybody's over the moon when your price essentially is doing this, but when we're at the other end of that, which you can see clearly, I mean, if you just look at a basic market cycle, you know, something like this where you have these kind of ebbs and flows in an uptrending market, which is exactly what crypto is. You know, it's a macro bull. I'm still very bullish on the crypto space. I just think short term we're in for a little bit of chop. And I pulled up this volume indicator here, and you can see just where the main points of volume actually are. What I'll do is I'll zoom in here, guys, because this is important. You know, you can see where we're currently at and where we're trading below. This is a key level in terms of volume, but volume across the board right now on exchanges is very low. I think this is very typical of retail sentiment. You know, these markets aren't being heavily traded at the moment by a large volume of retail. And in actual fact, I'd argue that your institutions, many of them, and one thing that this sell-off really since November has shown us is this is people taking risk off the table along with your equity market. And the reason they're doing that is because the Fed is actively trying to kill off the wealth effect, trying to tame inflation with interest rate hikes, which are really designed to lower liquidity, take liquidity off the table, make it more expensive, and have a dampening effect on markets. That's one way that they're trying to combat inflation, you know, bring down demand. And it seems to be working. And in fact, we're only at the start of a monetary tightening cycle. And remember, March 2020 is still one of the most significant events, I believe, of all our lifetimes, because the financial system itself, in my opinion, set into motion a larger play in regards to it completely changing. You know, I do believe we are moving in towards a new monetary system, which sounds strange to many, but if you look throughout history, there's always been a handover of these systems, usually ending in some sort of a catastrophe or a major crisis. I'm not calling for that now, but I think that is definitely on the table down the line. And like I say, you know, what I'm really looking at for Bitcoin is lows now. So I'm looking at areas like this that we potentially could be heading towards. And then a big one for me would be, you know, for me, these are buy zones. And we did actually show you not that long ago a chart of Amazon, or it may have been Apple back in 2008, 2009, with a similar kind of interest rate hiking cycle at play. Markets did sell off, but of course they rebounded. Certainly things like Apple and Amazon that were very early in their adoption as technologies. And that's a similar situation where I think crypto is in today, guys. We're very early on the journey that we are on. At $1.7 trillion, you know, this market can absolutely balloon once the right criteria is behind it. And the criteria at the moment does not really support a flourishing bull market across anything. And if you look, this is a very interesting tweet from HOZ. He's at MFHOZ. A 2% interest rate hike today is equivalent to a 5 to 6 one in 2008, because the total public debt is up 200% since then. So if the Fed raises the Fed fund rate to 2%, that is aggressive tapering, will do a lot of damage to stocks, real estate, and the general economy. We're moving towards potentially stagflation, in my opinion. Stagflation is essentially where you have high inflation and very low growth coupled together. So you can have high inflation with high growth and demand, but if the demand isn't there and the growth has kind of been dampened, yet inflation is still continuing to run away and they can't really combat inflation with interest rate hikes, which is what they're trying to do, then, you know, that isn't a very bullish environment, to say the least. But you can see very clearly illustrating here exactly what's going on. And actually into the March 2020 sell-off, the Fed were actually trying to up rates again after bringing them or moving them away from zero to combat the sort of 2008 financial crisis. That caused real issues in the repo market. You know, you had the yield inversion, very brief one, and of course that led to March 2020. You know, we're potentially moving into a similar thing, and the Fed really haven't even started upping interest rates yet. And the key thing to remember here is Fed is upping interest rates to dampen markets. That's what they're trying to do. That's their mission. So to think that it's not going to happen, I think is foolish. But ultimately, you know, this is one of those things where you see value, even though it's not being reflected by the sort of macro landscape. So let's move on to this. We have the dollar in green. Dollar is actually still doing very well at this significant level. Just a reminder, the last time the dollar was here in terms of the index, by the way, guys, back here, you can see Bitcoin was right the way down at your sort of 10K range, less than 10K. You know, March 2020, I think it sold all the way down to around about 4K. So Bitcoin relatively over time is actually doing very well. We just have this huge correlation at the moment. And it's been present really since March 2020 with your equities market. And your equities on Friday closed very down. This potentially should have been a bit of a pre-warning as the traditional stock market doesn't open. You know, it's a very risk-off environment. And when your stock market's open like that, close like that on Friday, it's kind of a good indication that the rest of your market is potentially going with it. And of course, we've seen the FTSE open today. Strong sell-off at the moment. I'm going to estimate and guess that the Nasdaq, the S&P are probably likely to do a similar thing. And of course, here in blue, we have the S&P. In red, we have the S&P. In baby blue, we have the Nasdaq. And of course, the correlation is extremely present and adverse to what the dollar is doing, which of course the DXY is pegged against things like the euro and a number of other things that really seem to be sliding off at the moment. The dollar is actually showing quite a lot of strength against currencies across the board, even ones that it shouldn't really be showing strength against given their commodity output. So the S&P, the Nasdaq, if that correlation is there, well, what potentially is setting up? Now, this is from the Market Sniper, and he's essentially calling for what can be called a macro head and shoulders on the Nasdaq Composite Index. Now, this is going to signal further downside. If we do indeed get this, and this is a potential play, what happens, and one thing that would support this scenario is, of course, what the Fed are doing and the fact that, it could be catastrophic for markets. What happens to Bitcoin? My thesis is that it goes along with it, given just how much correlation there currently is. This is, of course, the S&P. That was the Nasdaq we showed you. Very similar setup across the board. And this, of course, is your Dow Jones. So there's many people actually calling for one more rally before we get the kind of potential capitulation event that we might be moving towards. However, that doesn't look too likely given the kind of sentiment at the moment and given the fact that the criteria right now is very risk off for markets across the board. That is apparent and something that you can't take your eye off. And it's important for me to continue to remind people that this is what we're currently facing. As far as altcoins are concerned, you really need to look no further than Bitcoin, because of course your altcoins are very much just following. I mean, this is your altcoin market, by the way, ladies and gentlemen, and this is the Bitcoin chart. So the altcoin market is, of course, in orange. We will change that to pink to show you the correlation. So your altcoins are just hostage by Bitcoin. Bitcoin is just hostage by your macro markets. Your macro markets are looking very weak. And then this may be the sort of precursor to more downside, which we've been, it's always a possibility. Markets don't just go up, guys. They go down as well. And if you look at it from a sort of cycle perspective, we will remove this now. You can see you have a run, you have a cooling off, and you have a run. That's what I'm expecting, guys. This market isn't going anywhere. If it was, you wouldn't have all the big actors involved in it that you currently do. Even the likes of BlackRock, which are the largest asset manager on the planet to the tunes of trillions. They are involved in the crypto space in a big way. In fact, they are the main custodial for USDC, which is the second largest stablecoin in the cryptocurrency market. They wouldn't be getting involved if they thought this market was going anywhere. But you have to let markets play out. There's a huge wall of worry at the moment. It kind of makes me actually a little bit, I know this is going to sound contradictory to everything I've just said. When everybody is this bearish, not everybody's right, but there are occasions where the majority is. Most people are bearish at the moment. And that makes me think that is there the room for some upside continuation? We know that for Bitcoin, certainly Bitcoin in specific, lots of traders got wrecked. Can you please tell me who is leverage longing Bitcoin on a Sunday night only to wake up to Monday morning to a liquidated account? I mean, it just doesn't seem very fair on the individuals doing that. And it seems kind of nonsensical to me anyway. But, that's just my opinion and prerogative on it. Again, very low exchange volume, so moves can be a lot more volatile given the amount of money that's needed to move markets. Remember, markets are priced at the margin, which is money coming in and out at that given time. With very low volume, order books are thin. I know this because I've had to try and get out of small altcoins at time periods, and it can be a nightmare in terms of liquidity. You can end up actually getting eaten. You eat quite badly into your profits if you're just selling on market. I want to bring this up because this is important to remember your broader time horizon. Yes, we know the story with the crypto market right now, but this won't always be the case. Just like in 2008, 2019, nobody wanted to touch it. Then for the next 2 years, everybody was, all in. And now people are sort of stepping back again. But people will reassert. And what you've got to think is, it's a risk-off environment. We know that your institutions are taking risk off the table. What are they doing with that capital? Well, they're not going to leave it in cash. They are going to look to get back into something. And ultimately, when the environment dictates that is plausible, they will be running back into crypto. It'll be probably the first thing that they actually put on, given its higher beta caliber. And they'll be sort of leading the charge again, if you will, and buying up these lows, which is what I tend to do. You know, I'm a net accumulator of the crypto space. I still hold the majority of my portfolio. The only thing that we trimmed off was a very small altcoins, and now they are in stable coins, farming APYs to try and combat the high inflation. For us, we think the cryptocurrency market represents tremendous growth, said Skybridge founder Anthony. I'm not going to try and say his second name, but yeah, absolutely, guys. You know, this space isn't going anywhere, and it's only going one way over the long term. Short term, it's going to do what it does, what all markets do, given the kind of environment that they face. Again, to bring up some of the headlines on CNBC, we've got a lot going on. Greater Chinese market lead losses with Shenzhen stocks falling 6%, oil slides 3%. You've also got the whole issue with, you know, China's locking down a lot of their city, and this is sort of spooking markets. Lots going on in the debt markets, lots going on across the board. But there's always time periods like this, guys. The thing is, we get through them. I do, however, believe that there is going to be one big one in regards to a monetary change in terms of what we actually and how we view money. Because I think there was a huge distrust in your fiat systems, and Bitcoin came along, in my opinion, way too conveniently at 2008, just when everything really got hectic and when the cracks were starting to show before that, but even more apparent than they had previously been. But I don't think we're quite there yet, and I do expect crypto to come out the other end of this. And in actual fact, you know, if we just sort of range where we are, that isn't the worst scenario for me, to be honest. You know, if we come back down, I do eventually envision us going back to the upside. And if you look at a lot of your DeFi protocols, they're all in sort of falling wedges. Things are interesting, guys. Hang in there. It's not over for the cryptocurrency market. We're just going through a typical market cycle, which involves boom and busts. The bust side of things right now is very much controlled by the narrative, which is macro markets. There's always a narrative with these things, but to have the vision to see where this space is going, I think is going to serve you very well. So that is really all I have for you in this video, guys. If you've enjoyed this content, a like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a fantastic Monday, guys, and I'll catch you in the next one.